Hello everybody, this is Bitcoin Macro, and this is the second video guys from the series of videos that I'm doing about the current correction, where I'm talking about the topping signals. Later on I'm going to talk about other stuff like bottoms and so on, but for now this is going to be the second video where on the first one I actually spoke about several indicators, the pi indicator, RSI, I went through a lot of TA, some other indicators that are not, let's say, on TradingView, like the VWAP, the MRVR, Mayer multiple, and so on, because these are the ones that I thought are very cool for you guys to sort of find indicators for when the market is going to top or bottom. I'm giving you these indicators, you can study them more. I'm just telling you how to use them, or at least how I'm using them now, or how I could have used them in this situation, because each situation is different. But you can just go and have your own style. In my opinion, the best thing is that you just read the stuff that they say. You can just track the indicators and see how they perform, and just use these videos as a little bit of a guide, as somebody explaining to you some of the basic stuff for tops. But however, you can also use something similar for bottoms as well. Of course, every situation is very different, so bottoms are kind of different from tops, but you can sort of get the idea of where things could be going, or how to use an indicator later on based on the main behaviors that it has. Now, in this video, guys, I'm going to talk about the long-short ratios, funding rates, premiums, both the Korean premium and also the futures premiums. I bet you probably have heard of some of that stuff. Then I'm also going to talk about some stuff regarding Coinbase, GBTC, and Microstrategy as well, those stocks. But overall, this is going to be a very informative video, because I'm going to go even more in depth into some of the supply of Bitcoin, supply and demand on chain, because I do believe there were some very important signs there. Because with what I'm going to talk about right now, at least when it comes to long short ratios, it doesn't mean that you're going to have a massive top or the long-term top or something like it. However, when it comes to those other indicators, maybe some of those signals were a little bit more important. Now, first of all, the tool that I'm using right now is Coinalyze, which is a very nice website because it has a lot of futures, a lot of funding rates, and so on. And I have to use the Binance perpetual swap, the USDT perpetual swap, because it's the only one, at least for now, that has the long short ratios of Binance, at least for Bitcoin alone. On this one, guys, we can see very clearly that the long short ratio was very high. Now on the 4 hour, it's probably not as clearly as visible, but if I just go on the daily, you can see that before the big increase, that ratio was below 1 to some extent, or very close to 1, and that's when it was the best period to start buying. Now as it went higher, it was still okay to be long, but it was very clear again with the price that things were turning. And currently the long short ratio is still relatively high. It's not very high, but it's still relatively high, because we had a big drop recently, at least with this correction, but we went from about 4 down to 2, which is not that much. Now, of course, maybe some of those longs will start closing on the way up, which is very possible. It's very likely, actually. We have seen that happen before. Sometimes we do see long short ratios go down as we go up, which is the most bullish thing that we can see, especially after a very large correction. I'll come back to this too, because I want to show you some extra stuff. But before I get into the funding rates, I would like to go through some extra stuff regarding the long short ratios. So the next one that I'm going to look at is Bitfinex, because Bitfinex has some of the oldest data out there regarding how many longs and how many shorts there are. Although those longs and shorts just depict one Bitcoin rather than one user, which is not as good. It's the quality of the signal is way worse when it comes to looking at just how many Bitcoins are there, because it just might be one entity, one massive entity, which might not be even that leveraged. Now, the tricky thing about the current situation, or at least what was very clear in my opinion, and that was the fact that the long short ratio was sky high. It went up to 64. Now, it doesn't go back too much, because currently I'm using both USD longs and USD longs, because on Bitfinex they have USD as USDT. I don't know why they didn't use USDT. It's kind of confusing with the Terra stablecoin, but so be it. Now, with shorts, we had a lot of shorts close right below the big correction, and the USD longs, shorts were already really low. They were about 1,000 or less than 1,000 before the drop. Now, once things started dropping, it started increasing, and many people thought that that might have been just, let's say, some shorts that were about to get squeezed, but they actually got the direction right. And that's why the ratio drops so much, because that shift, that increase in shorts at that time had a very big impact on the ratio, but the ratio was already too high because there have been so many longs for such a long time that eventually that started collapsing. I mean, that led to the price, in my opinion, into a big collapse. And it was just very clear that many of these were actually people that were long and not some big whale that was trying to move the market or something. Now on OKX, we have more data. On this one, today at least, the long short ratio was about 2, which is the highest it has been in a very long time. Because up until now, usually the previous tops came, at least the previous corrections, with the long short ratio on OKX at about 1.3 and 1.6. Because what this one is actually showing, guys, is how many users are long or short. Because on OKX, you do have a match between shorts and longs because it's futures, it's essentially perpetuals or futures, and all of them, they are 1-to-1. So for every short, there is a long. But on Bitfinex or Gate, which I'm going to show you guys next, they don't have to match because they are spots. So somebody might go long essentially using leverage, but somebody else that sold him those coins might have just been a guy like me or you, just a user on an exchange that just wanted to buy spot and maybe withdraw it to his wallet. So it was very high. It has dropped significantly, but it's still pretty elevated compared to other periods. So that's probably a sign that we have to be a little bit more careful. But overall, the main thing I want to tell you guys is that the best thing for a long short ratio is that we want to see it go down when the market goes down. But if the long short ratio is going up when the market is going down, that's bearish. If the long short ratio is going down as the market goes down, that's bullish. Okay, because there are more and more shorts piling in, which could get squeezed on the way down. But if there are more and more longs piling in on the way down, the more pressure they have, the more likely it is that the market will eventually crash. For example, on Gate, we've seen the number drop from about 70% long to 30% short down to 53. That's a pretty healthy correction, and maybe that's an interesting bottoming signal right there. Now let's get back into funding a little bit. Let's delete these things right here and go with the funding. I usually prefer to look at the aggregated predicted funding because it's a little smoother and it shows exactly how the predicted funding is going to work. Because when you look at the funding precisely, it's not as clean because it doesn't really take into account all the differences in the fluctuations of the price, because funding is essentially calculated based on the difference between the spot prices and the price of the perpetual futures, perpetual swaps. The aggregated predicted funding, it just sums all of those fundings together. So instead of just looking at one exchange, we might not give you a clean signal. In my opinion, the best thing is to use the aggregated predicted funding. Now, we can very clearly see that we haven't really had a very big drop in funding, and this is the best one that we've had. So far, every time the funding was going a little negative, we had a decent bounce, but this started changing around this level. The funding would go negative, but the bounce would be weaker. But not only that, we had such a long period of very high funding that we just needed a cleansing. We needed a massive wipeout of longs, because there were so many people that were long, so many complacent people that kept going long over and over again, that it was just like the market essentially just cleaning itself. It had to happen. Now, maybe that's a topping signal. Maybe that's something that shows us that it's over. Maybe some people thought that because funding was lower than usual, it would eventually go up. But what that was showing after such a long period was that there was a significant weakness in the market and there was something changing. because although this might seem very small compared to other periods, it was just that those periods were extremely high, and I'm going to talk about why those periods were so high later on and why, in my opinion, there should have been a correction. Now, I mentioned one period before that I thought there should have been a stronger correction, but it was stopped by the Elon pump back then with Tesla and the Wall Street bet situation, where people started buying Bitcoin because of what happened with Robinhood and all that stuff with GME. But the main thing right now is that we've had this massive situation. We now see some green. We saw a massive correction, about 40% in a day in the crypto market in total. So maybe that's a bottom signal. And the other time that we saw that massive candle, there was just one time. Now it's not visible with the funding on here, but it was back in March. That was the similar time, the only time, at least as far as I remember, that I had such a negative funding over a day. Now the situation is clearly different at a different place, so maybe this is not a bottom like this one, but at least in the short term, maybe we do get some relief because we have shaken out a lot of longs. Now I'm just gonna look at this tweet, guys, because I wanted to mention something before. Now I'm not gonna move straight away into the on-chain stuff because I do believe there are a lot of stuff to talk about. But before that, I want to tell you guys that there were a lot of deposits on derivative exchanges. Maybe some of them include Binance and stuff like that, because they also have derivatives and also altcoins. So there was a lot of speculation. So we did see a lot of money move out from the exchanges that people usually buy Bitcoin. Let's say they trade spot Bitcoin like Bitstamp and others, and it started moving on more speculative exchanges where people would gamble with the Bitcoins, okay, and potentially even go long on those exchanges or short. Maybe some of them, they wanted to capture the premium of the futures, which I'm going to talk about. Maybe some others just wanted to speculate on altcoins, or maybe some others want to take bets on Bitcoin, but that's usually not a very bullish sign. Usually when those exchanges have their funds depleted, the less money those exchanges have, the more likely it is that the market is going to go higher. And that's why futures do matter. Now, having said that, we can just have a little look at the open interest, because in my opinion, it does matter a lot. We can look at the two different open interests of coin margin contract and stablecoin swaps. Now, the top one is the stablecoin swap. For some reason, there is an error to the website, and the bottom one is the coin margin swap. So here we can see that the open interest dropped by 5 billion almost from the top, about 10 billion. So we had seen the drop start from a long time ago, and there was no recovery. It kept growing and growing and growing really high, and then once it dropped, no interest, no pickup. We didn't really see the market really come back, and the open interest had grown so much because everyone was just complacent that the market would keep on growing higher. Now here we can see the issue that there was with the coin margin swaps, because a lot of people did have Bitcoin on those exchanges and started using their Bitcoin to trade, either to go long or short. We did see a massive increase by about 50% on the coin margin swaps on the open interest, which got crushed very violently. Usually, again, that's a bottoming signal, but maybe because this has been crushed so badly, we have to go lower first. But if we compare that open interest at this price, about 31k, and this price, now the open interest, at least in terms of US dollars, is about 30% less, which is very big. It's a very big difference, guys, because it shows how large the capitulation has been, and that a lot of the longs have been shaken out compared to back then, because we do have 20% open interest less. So usually when you have such a big increase, that shakeout, it might mean that there is an issue. But then when you get into the final one, the open interest being down about 60% or 65% from the all-time high, while the price is only down about 40%, that's a very big difference. Now on the next topic, guys, I want to talk about the futures, the premiums, and how you could have used them as a way to find the top. So on this one, guys, I'm looking at the OKX premium. The reason that I have the 12 hour is usually because there is a difference on the timing on OKX. So when I divide by the price on another exchange, I don't really get a clean signal, but it's still okay. And historically, we have seen that when the market comes around those levels, maybe we could say those levels around here, it would have a fairly significant correction. Doesn't matter how long, how big, but there were many times, especially during the previous bull market, that the premium would turn into a massive discount, and the discount would be the best opportunity to buy. So usually when we get very high premiums, that's a topping signal. It means that the market is getting very frothy. Potentially a lot of the shorts have gotten squeezed. A lot of people are very afraid to go short, while there are so many people that are willing to pay a very high price to go long. And then not only do they pay the extra premium when the price goes down, they also pay an extra premium by the price going down itself. So they lose potentially more than 10%. So for example, all those people that were going long with the premium around 10%, they got squeezed and they got really, really wrecked. And that was the main signal, guys. Because usually when the market comes down to this level, up to these levels, it has to continue growing and growing and growing. There has to be a proper demand, a proper push, a proper force that would propel the market to go higher. But once the market starts tumbling, it just shows that there were so many longs that they were potentially afraid to also lose that extra 5-10%, that they would just keep unwinding and push the market lower. So the first sign was that we had that initial capitulation, that initial massive drop on the first correction around April. So around April 16th, that was the first big correction. And it was kind of similar to the correction that we had in March in terms of how much the the premium dropped, but then it bounced and then it came down again. So maybe we do have another drop at some point. So that gets very negative, because usually after we come from a period of very high premiums, usually that resolves with a very big negative premium. So it goes into a discount, it goes into a massive discount. Maybe that's enough. But I'm not sure yet, because so far historically we have seen more drops. Currently that was probably enough for now, but I don't know if there might be another one that takes us a little bit lower. Now you can look at several exchanges. Some of them had very, very big spikes, others didn't have massive spikes down. Now you can look at them like this. I'm using moving averages to just filter a little bit, because the ones that are a little bit ahead in the future, these are the ones that have the higher premium. I have multiplied them by 1000, and that's why you see those numbers. That 2.3 at the end is 2.3%, that 3.4 at the end is 0.34%. So essentially it's 0.34%, yes. And right here we're just at 0.5%. We haven't had a massive capitulation on OKX. It did work a little bit more smoothly at the time, but on other exchanges we did really have a very, very big drop. And that's why, in my opinion, although it didn't happen on OKX, it did happen on other exchanges or other futures, which might be enough for this to be for the correction to be over. But the main thing that I wanted to mention is that when you see the premiums go down like this, that's a very bad sign. You don't want premiums to go down like this, especially when the premium go along with the price. It's a sign that the trend is strong, except if they start getting a really, really overbought, essentially when they get above certain levels that they are very far ahead. The trend has been going on for so long that eventually it will reverse. But if the premiums are nice, stable, they don't really go up too much, they just follow the trend, that's a very healthy sign. Because what that allows is a lot of people, they can just buy spot and they can short that Bitcoin. So essentially you can buy Bitcoin, guys, and that's like yield farming. because you just buy the Bitcoin and then you go short on those futures. So if the premium there is about 10% for the next 3 months, so essentially you're shorting the quarterly. So if you short a quarterly that has 10% premium, you're going to get 10% in the next 3 months. So when you close your position at the end, you can capture that premium. Of course, you might be able to take that a lot faster, maybe when there is a big drop like this one. But overall, many times you might have to wait until it resolves at the end, when the futures settle, because you know that at the end you're gonna get the exact spot price. So essentially, when you're going short futures, you are and you have the collateral in Bitcoin, you're essentially 1-to-1 short, which is like a synthetic USD. However, you can also capture that extra premium, because that will be settled at the spot price. So if the premium right now is 10% higher than the spot price, then that means that at the end you're gonna get the spot price, but you sold at the 10% higher price, and that's where you get that extra 10%, which is very nice. So rather than doing yield farming, which might be a little bit more risky, maybe you do trust an exchange, it's potentially an easier way to capture some yield, but you have to be patient, because sometimes maybe the yield goes up, maybe the premium goes up, so you have to be a little bit more patient with this strategy. Now let's get onto some other stuff regarding the Korean premiums and so on, because there are so many interesting things right here. Now, the Korean premium has been going higher and higher, which is very worrying in my opinion. Back then, when we had that very high Korean premium, that was a little bit of a topping signal. At least some altcoins did top at the time, because the Korean premium was about 20% higher from the spot prices. And that's not a very good sign, because yes, Korea has a lot of users, yes, a lot of people are trading in Korea, and they cannot really get the funds out because of the laws, because of the capital controls over there. But still, having to pay 20% extra for a Bitcoin or a cryptocurrency, that's a little bit over the top in my opinion. It just shows a lot of froth, and that's why we have seen those weird price actions in Korea. And it's just something to keep in mind when you're buying anywhere that you're buying. If you're buying a premium, maybe there is something wrong. You just prefer to buy wherever you can take the money, you can take custody of those assets, rather than keep them on an exchange that has that high premium. Now, if you're thinking about selling and withdrawing the money into your account, you want to do it on the exchange with a higher premium, if there is any. But again, the main thing is that it has been signaling froth. During the correction, the premium has been going higher in Korea, which is not the best sign ever. Maybe it just shows a lot of demand, and maybe the Koreans are able to buy those coins. Maybe it just shows that there is still the demand, so we're not ready yet for a collapse. But in my opinion, it's just not the best signal out there. Now, the funding rate, like we are seeing here, at least the ratio between several perpetual futures and the spot exchanges is about 1, so it's very close. We see that there was a very big drop, and now the market has recovered. That shows us the same thing as funding. And right above, I have the ratio of Coinbase and Binance price. So essentially, we do see which is higher, a USDT or a USDT on Coinbase, or a USDT on Binance, or a USD on Coinbase. And that's a very important ratio to follow, because that's when we know who is buying more. So if the price on Coinbase is leading, it does mean that there are more maybe institutional investors, or maybe it means sometimes it's a lot more driven by retail, whereas the price on Binance usually indicates that it gets driven by speculators, and it gets driven by maybe futures, or let's say margin, and people buying with borrowed money, rather than that being spot, like just being driven by real money getting into the market. And then we have the Bitfinex price, the Coinbase price divided by Bitfinex price, and both of those initially had a dip when the price was going down, and then once the price started bottoming, they had a very big spike up, which is showing that there has been a lot of demand, and potentially that is happening because there are some institutions buying all the cheap Bitcoin at the current prices. Now, next up, I'm just going to talk about MicroStrategy, Coinbase, and GBTC, because there are a lot of stuff that I want to mention in there. So, for example, when we have that very, very big rally of MicroStrategy topping like this was not the best sign out there, because when we saw that top formation happen, it just showed that there was a lot of froth in the market. There was a bit of an excess because people speculated also. We also saw that in the Bitcoin price, because it was Tesla, it was MicroStrategy getting more and more loans to buy more and more Bitcoin. But the price of MicroStrategy started falling way before the price of Bitcoin. It has already fallen about 70%. And that was a bit of an indication that there was less interest for Bitcoin. Now, that's not a very clear sign as to why, however, at least to some people, but maybe some of the big investors that wanted to be into MicroStrategy to get exposure on Bitcoin, some of the smarter investors, they started selling. Okay, they started selling. Maybe they were anticipating an ETF, but they were probably wrong. Maybe that was the reason. Maybe the ETFs in Canada played that role. Okay, but in my opinion, it was just a little bit of a sign that the market was overdone. We had a very, very big rally, and currently MicroStrategy has fallen way lower. And we also saw that with that other correction, when that gap got filled, we had an immediate rejection, and that's when the market started dropping again. So it's very interesting that the TA from this MicroStrategy chart is very, very good, and was an indication that we had lower to go, because once we had those bounces of the same support with essentially equal lows right after having that blow off top and then filling that gap, we started falling lower. And that was, in my opinion, another indication of what was going to come, especially after the breakdown of MicroStrategy. Now, if I look at GBTC, the price alone, we can see that that was a little bit of a distribution. We can see that we had that top initially in January. The price didn't really manage to stay above it or really go much higher. We have seen that there has been a steep discount. But the main thing that I want to notice here before I move on to the premiums is that we had that rejection, and that looks a lot like distribution, maybe like even head and shoulders, where this is the shoulder, this is the head, and this is the other shoulder, because it also happened pretty close to that all-time high. So that was a little bit of a support initially, but once we closed that final time, after that second touch right there, once we closed below it, then it was just game over. Again, we have seen that there was less and less demand, and that's why the premium of GBTC has gone down. Potentially that has limited several big investors from getting in, because there is no ETF. Maybe they are afraid to get into GBTC. Maybe there is just enough Bitcoin out there, just enough ways to buy Bitcoin and hold it right now. Or it could just be the fact that there is less demand, and we start getting that signal from the GBTC premium. So of course, if you're interested in buying GBTC and you're expecting an ETF, that's a good move now that it has a pretty good discount, in my opinion. But of course, you have to be ready to hold for quite some time and be ready to go through a very big downside, and maybe even the premium getting larger. So if you buy, you have to be very aware that you might have to sell at a much lower price and at a much lower premium, at a much steeper discount essentially. And finally, I just want to look at the Coinbase chart, and I'm not going to talk about the Coinbase price in general. I'm not going to talk about the fundamentals of the launch, because I want to keep it for the next video, because I would just want to put it on all the fundamental catalysts that have happened around this event. But the key thing here is as well that we have seen Coinbase just drop and drop and drop and drop. And that was another sign that things were not going well. Of course, Coinbase had a pretty big market cap. That was a bit of an issue. So initially it did drive the market up because it drove a lot of attention. But that also probably created a little bit of too much hype, maybe that created a little bit of forced selling because some people want to buy Coinbase stock and so on. So the price wasn't great. We saw that dump continuously. That was probably another sign that that was not the best place to be. Maybe that was a sign for crypto that the slowdown had already started, at least in some sectors of the market. Because if technology stocks in general had been dumping, that is a bit of an issue. And this is something I'm going to talk in the final video as well, because I do believe these things do matter, and you should be aware of these factors when it comes to, let's say, bonds, the data that we had with inflation, the bad jobs numbers, the tax hikes, overall tech not doing well. But like I said before, I'm just going to talk about them in a separate video. Now, I'm just going to make the final analysis on the on-chain stuff as brief as I can. I'm just going to mention all the stuff that I thought were very interesting in this analysis, because there were so many things. Hopefully, I'm just going to try and make it below the 10-minute mark, so that it's going to be a 40-minute video. It's too long, guys, I know, but it's really good information, and that's why I want to give you guys all that stuff. Now, as you can see here, this is from the Glassnode's insights from week 20 on 2021. And that's a very, very good analysis, guys. I recommend everyone to read it. It doesn't really say about buying or selling, but this is how I was interpreting the stuff. And I thought there was going to be a correction underway. So when we look at the percent of entities in profit, that does matter, because the more people are at a loss, the worse things get. Okay, and yes, when things are very good and very nice and everyone is in profit, then things could stay like that for quite some time. But what happened here was we did go up. There was a lot of profit. There were a lot of people in profit. However, once I started breaking down and we didn't really have a recovery, we didn't really go back to those highs, we failed and we started dumping significantly. So at this top right here, when that diagonal broke and we went back to the levels that we were back here, it's just a top that it's just a move essentially that we hadn't seen in the previous bull market. So once it came back to this level, it was a bear market already. Now, up until that point, we hadn't really gone all the way down to this level, because what happened in this period right here, at least from 44K all the way up to about 64K, we were going sideways, and slowly people start losing money, slowly and steadily. So there wasn't really a need for a massive correction immediately, but a lot of people are probably at a bigger loss right now, especially after the correction. But the key thing to notice here is the direction change, the fact that we came back to those levels that essentially only in a bull market they would be bullish, but this time around they were bearish. And we see that nice breakdown, that essentially retest up there, that failure to stay above, and then we went lower. Now maybe we do come back to the green zone where 50% of entities are in profit and 50% are at a loss. Who knows, maybe that's the level that we're gonna see the bear market bottom again, if we are in a bear market. But in my opinion, it's just a pretty good indicator to be looking at if you want to know when to buy or when to sell, or if you're looking for tops after the fact. It's just a confirmation of whether the top came or not. Like I mentioned in the previous video, like the SOPR, it was showing some signs that they were not very good, because yes, we started visiting the same levels as we had when the bull market was on, but the deeper they were going and the more they were closing below the baseline, the worse things were getting. Now, we also had a very big decline on the non-zero balance, the number of addresses with non-zero balance. We had a decline on that one, which is very unusual for a bull market. It's not a good sign, because it just shows that there have been a lot of people selling. We didn't really have the proper growth, because the previous corrections, they weren't really that large, and it was just a sign that more and more people were stacking Bitcoin. But this one, it showed that people were actually selling. they were consolidating. There were people maybe sending the coins to exchanges for those to be consolidated. Now, we did see that there was a bit of a tricky thing where maybe some of that money went to whales, which have withdrawn it to one address, or maybe it was other people withdrawing that into, let's say, exchanges, derivative exchanges. So they were speculating. But overall, this is a fairly significant drop, which showed a big change in a very large trend, because at minus 2.8% within that trend, that's large. Especially we have had large corrections, similar corrections. That correction was about 31% from 42k all the way down to 29k. The other correction from 58 about to 43k was also about 25%, if I'm not mistaken. So it wasn't the first large correction, but this one, that was different. Now, the most important one, in my opinion, is the total supply held by short-term holders. And this does tell me quite a lot of stuff, guys. It's probably the most important chart in there, because I'm just going to tell you something that many people won't tell you. And I've mentioned this before, but I don't hear anyone talking about it. The reason that you see this very, very big increase right here in 2017 is because of the Bitcoin Cash fork, SegWit, and all the forks that followed afterwards. That's why you see that really, really steep one, whereas the other ones were a lot smoother, whereas this one is just more rapid and then it continues higher. Because what happened was people had to move their coins in order to split them to get the airdrops or the forks. So there was Bitcoin Cash, Bitcoin Diamond, Bitcoin Gold. There were all these forks, plus there was SegWit, so people were moving their coins when there were like less fees into SegWit addresses, so that they would pay less fees in the future, because they just wanted to trust SegWit, they want to test SegWit. So these things did play a role and had some people move their coins. And that's the key difference, because back then that was about, the top was around 37% of the circulating supply. And this time around, the top has been at about 28% of the circulating supply. But here's the thing, that 9%, it could easily be because of the Bitcoin Cash fork and the SegWit stuff, because we do know that about 50% or more of the people on the Bitcoin Cash chain eventually move their coins to sell them. Because guys, if you were able to get 10 to 50% for your Bitcoin, would you not get it? And that was the price of Bitcoin Cash for most of 2017, 2018. It was above 0.5% in Bitcoin terms. So you would get a lot of money, you get a lot of Bitcoin by selling your Bitcoin Cash. And that's a very big difference. And that's why, in my opinion, you can see the same pattern here, where we have the new buyer FOMO, and then we have the turn right here. And when that started, it didn't stop. And the same thing happened right here. So I had the panic selling, and maybe that was the ignition for this to happen. Now, I'm not really going to look too much on the exchange flow dynamics, because we have seen and will potentially keep on seeing large withdrawals. A few exchanges have gained more and more money, because we have seen also accumulation addresses grow, which is bullish long term. But here's the truth, guys. For now, that probably doesn't really matter as much, because we have seen those bullish data for a really long time. But at some point there will be some cooling period. Maybe some people that were saving in those addresses, they capitulate as well, because after a 50% drop, they might be in a tough spot as well. So sometimes a lot of things do reverse very quickly, despite the fact that there is more money coming into the market. Maybe we do have some issues with all the deposits and all that stuff. Then the total supply held by long-term holders, we have seen the distribution. We saw the distribution in a bull market, then the accumulation in the bear market. We have seen the initial distribution right here. I don't think, of course, we are in a bear market, but we have seen a little bit of an accumulation. But maybe that takes a little bit longer to play out. I don't really think there is that much to worry about on this level right here on this chart. But the other thing that I wanted to say in general is that we have seen whales offloading. Not many, but we did see some accounts with 1,000 or 10,000 Bitcoin sell their Bitcoin. And that's a very big thing, because some people might say, okay, look at all these people accumulating. Yes, there are some exchanges that are accumulating, but maybe those are exchanges. Maybe those are certain entities who might distribute the coins at some point, especially if they're losing money. But the fact that we have seen so many sellers, probably more sellers than we had in 2017, that's a pretty big indication, in my opinion, that there is a little bit of an issue. So remember, guys, the main thing that I want to let you guys know from the on-chain data is the fact that that 9% difference, it could potentially have come from the Bitcoin Cash fork and that situation. So that bull run, it lasted longer. So it's very weird to me that this one is ending a lot faster, or at least it has ended. But here's the truth. Like in this situation right here, we failed to make new highs. We started turning around. We have broken some very key support levels. At some point, there will be some bounces, but the truth is that this is a very, very crucial indicator that maybe things have turned, because the more new holders hold these coins, the more likely it is that they will panic and sell. Now, maybe the people that they sold the coins, maybe they start buying as well. The sellers might start buying the coins from the new buyers once they start panicking lower, but that will be a long-term process. So, it's just something to keep in mind if we have turned into a bear market. So that's it from me, guys. Please remember to like, share, and subscribe. Please press the bell icon down below to get more videos like this. I've got more videos coming for you guys in this list. So the next one is going to be the final one from the topping signals. This is going to be the final one for today. And then I'm going to have a few more later on for you guys. I hope you enjoyed this one. Please remember you can follow me on Telegram, Twitter, and TradingView, where I put live updates. I share my thoughts. It is a little bit more like a trading diary because I share more random thoughts than anything else. You can also come on the Decentralized Chain channel. But in my opinion, you can just watch these videos, subscribe, because most of the information is on those videos. So thanks a lot for watching, guys, and I'll see you on the next one.